We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelming on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Wojcicki. Joining me today is Nick Giambruno, Chief Analyst at Crisis Investing. How are you today, Nick?
Oh, I'm doing great. Nice to be with you, Tom.
Great to have you back on the show. So for those of you that don't know, can you give us some of your background, how you came to meet Doug Casey, and maybe some of the most important lessons that you've learned from him?
Yes. I met Doug Casey in Beirut, Lebanon in 2010, I think. Yeah, 2010. It was either 2010 or 2011. And I was at the time working at an investment bank in Beirut, but it was based out of Dubai. And they had a little office in Beirut. And I really enjoy the city of Beirut. It has a lot of problems recently and in the past. But in relatively normal times, it's a beautiful city on the Mediterranean, and it's fun. It's wild. I really love it. And love the place. So back then, this is, over 10 years ago now, I had been working there, and Doug put it out in one of his newsletters. And I had been an avid reader of Doug and fan of Doug's for many years. Put it out in his newsletter that he was going to be traveling, because he travels to all these, weirdo places like Lebanon and so forth. So he put it out in his newsletter. He was going to be visiting Lebanon, and if there was any readers who would like to get together and have a coffee or something. So I just replied to his email that he put in his newsletter, not thinking that he would say yes or agree to meet. And we did get a chance to meet up, got along very well. And one thing led to another, and I started, working with him and writing newsletters, assisting with newsletters, and that's kind of been the story since. And I've been happily working with Casey Research ever since.
So, Nick, as part of your, let's say, exposure to Doug and his ideas, can you highlight for us, a lesson or two that you really found valuable that you were able to glean from him?
Yes, well, there's many. First, as it relates to travel, you want to go to the places that they tell you not to go to. You're going to have all the adventures that you won't in kind of a more boring, well-traveled place, say like Western Europe. Go to places they tell you not to go, or that look scary from the media, because when you get there, it's probably 99.9% hype, and you're going to be fine. Obviously there's situations you got to be careful with, but generally speaking, go to places that people don't go. That's not just with travel, that's with investing. You want to go to places where people aren't at. And you want to be, you want to be a contrarian. So he's helped, I was always naturally a contrarian, but he helped hone that contrarian thinking. Also, another very important thing Doug hits on a lot is the importance of accurately defining your words and making sure you know what you're talking about. Because so many people throw out these conflated words, and they don't really know what they're talking about. I mean, it's kind of, you want to have a first principles understanding. So like inflation, for example, most people throw this word around and think they know what they're talking about. The fact is that inflation is not the CPI. I mean, this is ridiculous. CPI is inflation was traditionally defined as an increase in the money supply. CPI is a completely different thing. It's a completely meaningless statistic. Anyways, this is just an example of what I'm telling you about, is that don't just take things for granted that you hear in the media and, parrot them. Think about what they actually mean and come to a conclusion yourself. So those are two of the most important ways Doug Casey's influenced my thinking.
I think that's very important nowadays to really try and evaluate these like you say, these parroted opinions that you hear and try and make your own mind up about what's happening. Nick, I recently read one of your articles entitled "The New Crisis Currency." So what is your definition of a crisis currency?
Well, it's a currency. It's a money. I think money is a more accurate term now that I think of it. Money, and instead of current, talking about defining our words properly. There's a world of a difference between currency and money. And now that I think about it, I should have called it the new crisis money. I think crisis currency just sounded a little catchier. But what I meant is money, because currency is just anything the government can put its stamp on a worthless piece of paper. So money is a completely different thing than currency. So what I meant by that is that where do people go? What monies do people go to in times of crisis? Traditionally, that's been gold and lesser degree silver. But what I was talking about here is the new crisis currency, the new crisis money. And that is Bitcoin. And I know that's, maybe a little controversial or hard for people to wrap their minds around. But Bitcoin takes a lot of, if you look at what makes gold, and it takes a lot of all of those attributes basically, and it distills it into something digital, which is a very profound invention. Digital scarcity, not only digital scarcity, but digital hardness. And hardness is different than scarcity. Hardness is you're looking at, it means hard to produce. Scarce it's a related concept. It's not quite the same. Hardness just means it's hard for anybody to inflate, resistance to inflation. And Bitcoin is even more resistant to inflation than gold, I would have to say. But let me hasten to add that I'm just talking about Bitcoin. I'm not talking about the other cryptocurrencies, 7,000 or so other, they're basically vaporware and junk. The real innovation, the real revolution is in Bitcoin, because what the person who created it did, he created something that nobody else has been able to replicate now, and I'm very skeptical they will be able to in the future. He basically created a digital decentralized scarcity. And we can go in the economics of that and the computer engineering aspect of it, but the guy was really a genius on how he set that about. So that's what sets Bitcoin apart from all these other, they're really, it's Bitcoin and these other crypto. It's like comparing gold to pyrite, or a gold coin to a Chuck E. Cheese token. It's really inappropriate to lump these things together. So Bitcoin truly is digital gold. These other things are digital Chuck E. Cheese tokens or digital frequent flyer miles, for the very simple reason that people control all of them, from Ethereum on down, all the way down. There is a group of people that can control these things, that can change the rules at will. Bitcoin is different. Nobody can change the rules. Nobody can change Bitcoin. That's what makes it different. So that's what gives it its credibility. So this is a totally new paradigm. And some people have likened Bitcoin to the platypus, which is a weird thing to compare it to. If you remember, the platypus was this new animal that people found, and they would tell their friends in other countries, "Oh, we found this weird animal. It doesn't really fit into any kind of classification that we know of animal." And people didn't believe it. They thought the platypus was a joke, or that they made it up because it didn't fit into the classification of what animals were at the time. But it wasn't a joke. It was a real animal. So I think that's Bitcoin doesn't. It is definitely a new paradigm. Digital scarcity is a genuine new paradigm, and I think people have trouble wrapping their minds around it. But once you see it, you can kind of see how people get confused, just as they did with the platypus. But it's a very profound thing.
So as we're talking about Bitcoin, Nick, do you see it as an investment or a speculation?
I see it as both. I don't think they're mutual, and I see it as money. The way I see it, as I view it, as hard money with a call option attached to it, hard money with leveraged upside. So what it is that we're in the process of monetization. Bitcoin is in the process of becoming money around the world. This isn't something that happens overnight. And this is why criticism of, it's too volatile to be money. Well, that's true, but it's by the time it's not volatile, it's going to be much higher. So nobody alive has seen a process where this new thing has come and it's gone through a process of voluntary free market monetization. It's not been, no government is forcing you to use Bitcoin. It's a voluntary monetization. Nobody's seen this. It's as if you compress the history of gold into 10 years and the history of gold's monetization, because gold wasn't, it took humans hundreds of years, maybe more, to figure out that gold was suitable as money. This is happening with Bitcoin on a much this monetization is happening on a much more compressed timeline. So it doesn't really, like I was saying before, it's like a platypus. It doesn't really fall into any of these buckets, like an investment, a speculation. It's kind of a new thing. And what it is an emerging form of money that's going under the process of monetization. So I think of it as hard money with a call option attached to it.
So, Nick, as we think about that, what are the basic different purposes that gold and Bitcoin serve?
Different purposes. Well, the main purpose is money, and money. We talk about defining our terms. Money is not that complicated. You hear these academics and these people in the media. They have all these complicated charts and jargon and formulas. Money is not difficult to understand. It's two things: storing and exchanging value. What's something that's good at storing and exchanging value? Then you got a good money. So that's why gold has certain attributes that made it useful for storing and exchanging value. First of all, it's we could talk durable, divisible, it's consistent, and so forth. It's convenient. But what really is the thing for gold is that it's neutral. And what makes it neutral? It's politically neutral. I mean, in the sense that China can't just decide to inflate the gold supply by 20% this year. It's hard. What makes it neutral is that it's hard to produce, and it's hardness. That's the proper word meaning of hardness. Hard to produce. Easy money, on contrast, is easy to produce. So what makes gold hard to produce? The fact is that gold has enormous stockpiles relative to existing production. So it's very hard for anybody, any group of miners, any country, to inflate the supply, because that annual supply growth is so minuscule relative to the existing supplies. That's what makes gold a hard asset, and it's something that's hard to inflate. That's a good store of value. That's one of the primary roles of money, is to be a store of value. You don't want something that easily inflates. That's why gold is the hardest of all commodities. That's why it became money, because it's hardest produced relative to existing supplies of any commodity. And this gets into the distinction between hardness and scarcity. So you have platinum and palladium. They're technically scarcer than gold, but they're not hard assets, because the annual production of platinum and palladium basically is equal to the stockpiles every year. Every year, the amount of platinum and palladium that's produced is equal to the stuff that's already above ground. That makes for a very poor store of value, because it will be dependent on annual production, industrial demand, which can wildly swing the price. Whereas gold, the annual production is like 1% to 2% per year. That's terrific. They're not going to have wild swings in the price of gold because, we produced a lot of gold this year. No, it's basically insignificant relative to the supply, the existing supply. That's what makes gold a hard asset, and that's what makes gold a superior form of money.
Nick, something you had brought up earlier is this monetization of Bitcoin, and something we saw over the weekend was that El Salvador is now, moving towards making Bitcoin legal tender. So tell us more about that and how you see that move.
Well, this is a huge milestone on the trend that I'm talking about, this monetization of Bitcoin. There you have it. You have the first country that's going to adopt it officially as a legal tender, not just adopt it as legal tender. They're going to put it on their reserves. They're going to have it on their central bank balance sheet. And they're going to, what does it mean when it's legal tender? It's not going to have capital gains on it. It's going to be legal tender. You can't have capital gains on legal tender. So it's going to be a very interesting experiment, because Bitcoin is going to be on a on a level playing field against the U.S. dollar, because the U.S. dollar is El Salvador's currency at the moment. By making Bitcoin legal tender, Bitcoin and the U.S. dollar will be on a level legal and accounting and tax playing field. So it'll be a very interesting thing. I mean, I think, clearly Bitcoin is a superior form of money to the US dollar. So it'll be interesting to see how that plays out. This is a historic, it's like a shot heard around the world moment. I bet there's going to be many other countries that follow. So I wish El Salvador all the best. And I think it's a terrific piece of news for not just Bitcoin and Bitcoin investors, but for human freedom, because Bitcoin is a free market form of money and nobody controls it. It really gives the individual monetary sovereignty in the same way that gold gives the individual monetary sovereignty. They both do. They're both free market forms of money. Fiat money is horrible. It's a terrible thing in every respect. So it's a huge step in the right direction.
In this vein of crisis currencies, Nick, even though most parts of the world aren't as bad as Zimbabwe or Venezuela right now, should we be thinking about those that hold their savings in fiat, as you were saying, as being in a crisis in reality?
Oh, definitely. I mean, the amount of money printing that's been going on over the past year is unprecedented. I mean, the U.S. government, if you look at all fiat currencies, I mean, if you're going to hold fiat currency, you might as well hold the U.S. dollar, which is the best of all the fiat currencies. So if you want to hold fiat currency, there's no point in holding Canadian dollars, Mexican pesos, kwachas, or renminbi or anything. You might as well just hold the U.S. dollar, quite frankly, because all these other currencies basically are largely dependent on the U.S. dollar. So you get U.S. dollar risk plus country risk, and I don't want that. So if you're going to hold fiat, you got to have fiat to pay the bills. At this point, you might as well hold U.S. dollars. That being said, there is a crisis in fiat money because these governments have gone insane in the money printing. I mean, the U.S. government over the course of a couple of weeks last year printed more money than it did for its entire existence. That's mind-boggling. That's crazy. This is insane. So I always like to talk about putting things into context. A trillion. Most people can't wrap their minds around how big a trillion is. An enormous number. So for perspective, 1 million seconds ago was about 11 days ago. 1 billion seconds ago was about 1989, the year 1989. But 1 trillion seconds ago, if you counted 1, 2, 3, 4, 5, and started, how long would it take you to get to today? You'd have to start in 30,000 BC. That's how big that's how long 1 trillion seconds ago was. It's insane. So when these governments are printing money, $1 trillion here, $1 trillion there, $6 trillion budget, $3 trillion money printing, you're getting into dangerous territory. And they're really, I view this as a criminal act to print money. What you're doing is you're stealing money from savers. You're taking from people without their consent. It's taxation through fraudulent means. And I think it's criminal what these central banks are doing in the proper sense of the term criminal too. They're stealing, they're taking stuff from people, purchasing power by diluting the currency at an incredible rate without their consent or their knowledge. Really, these people, if there was any justice in the world, they should be arrested and thrown in prison and made to pay restitution for all of the damages they're causing.
So even though it doesn't seem on the surface, let's say, like the U.S. is in crisis mode, inflation, as you say, this expansion of the money supply is really in high gear. So you mentioned this earlier, Nick. How do you look at the Fed's measure of inflation, or CPI, and do you think it's a reasonable metric?
No, it's completely meaningless BS. It's propaganda, and I'll tell you why. The CPI, the Consumer Price Index, it takes a basket of goods and measures them, and it comes to one number of inflation. First of all, inflation doesn't happen equally. Some parts of the economy experience high. But wait a second. Let me take a step back. The word inflation means an increase in the money supply. It doesn't mean an increase in prices. It's a very important distinction. It sounds subtle, but it's not. Because if you look at dictionaries, the Webster Dictionary prior to 2003, I believe, defined inflation as an increase in the money supply. Then magically in 2003, they changed it to an increase in prices. And if you look at Keynesian economists and government apologists, they're all trying to redefine inflation from an increase in the money supply to an increase in prices. It's very deceptive, and it's more than that. They're not acting in good faith. What this is like, this is similar to redefining robbery to a mysterious loss of property, as if there is no robber involved. These people they're BS artists. So no, that definition of inflation, the Fed's of course they're going to manipulate it. So let's just, for argument's sake, talk about the CPI and assume that's inflation, even though it's not. It's not inflation. Let's take that, the CPI, a Consumer Price Index. It's a basket of goods that the government gets to cherry pick and include in this so they don't include food or energy or medical care costs really in the right. They get to choose not only what's in the basket, but what the weighting of it is in the basket. So they're not going to choose. First of all, that's an impossible task. My basket of goods is different than your basket of goods. Somebody in California is going to have a different basket of goods than somebody living in Texas or somebody living in Nebraska or somebody living in Colorado. So the idea that you can make a basket of goods that's consistent for everybody in the entire country for over 330 million, it's absurd on face value. It's likened to, oh, let's take the average national weather temperature and use that to figure out what we should wear today. It's ridiculous. It's like, oh, let's take the average temperature in Hawaii with Alaska, with Oregon, with Minnesota, with Florida. It's absurd. So the very notion of a consumer price index for everybody is ludicrous because you can't make it for everybody. But even if you could, you have the government cherry picking the little components so that, well, what do you know? We don't have any inflation. Who would have thought? You let the government cherry pick what goes in the basket and the weightings. Of course, they're going to pick things that don't inflate or their prices don't go up. So that's completely absurd. It's really is propaganda when they talk about this. The CPI is propaganda because what they're telling you, they're feeding you lies and they're concealing it in jargon, in like academic and economic jargon. Really what they're saying is, what the reality is we're printing, trillions of dollars. It's stealing the purchasing power of your savings. We're manipulating interest rates low. So there's no market in interest rates. So you can't really get any money on your CDs or your savings. And you know what? There's no inflation because guess what? It's like letting a student grade his own paper. I mean, it's completely and utterly meaningless. Anybody who takes CPI, they should really reconsider. And if they really seriously think this is, so the only people who take this seriously are fools and knaves. So people who really are fools and don't really know what's going on. And then you have kind of like evil people who are manipulating and lying to the public. So I think you should take the CPI and throw it in the garbage, the dustbin of history, and hopefully, throw salt in the soil so it never comes back up again.
As we're talking about the US dollar and let's say where it's headed, we saw again an important piece of news last week when Russia came out saying that they are going to be getting rid of their US dollar reserves. So what does this move signal to the world, Nick?
Well, it's part of an ongoing trend of de-dollarization. I mean, the dollar, yes, it's the best of all fiat currencies, but it comes with some serious political risk attached to it. So the U.S. government uses the U.S. dollar as a weapon, as a financial weapon. It beats countries over the head with it to get them to follow their foreign policy or whatever policy they want to promote. And Russia is an independent country. It doesn't like to be pushed around and bullied by the U.S. So I think that's a very smart move. Sadly, I mean, the U.S. dollar, going back to original definitions, the U.S. dollar, as defined in the Constitution, is just a number of grains of silver. That's what the U.S. dollar is supposed to be, and it's supposed to be precious metals. What they're talking about now, those aren't U.S. dollars. Those are Federal Reserve notes. Those aren't dollars. Those are just liabilities of the central bank that they created out of thin air. Fiat money. Anyways, that's I don't mean to get stuck up on technicals, but yeah. So the Russians, they don't want to be beholden to the Americans. They don't want to have to worry about their holdings, their dollar holdings, being frozen, being seized because they're not going along with U.S. policy. So this is also, the U.S. government is very foolish because they're engaging in such ham-fisted measures such as sanctions and kicking people out of SWIFT, and they're shooting themselves in the foot because the more they do this, the less they're going to be able to use the dollar as a financial weapon. And people are going to figure this out. They're already figuring this out. They've long figured this out. But they're moving to neutralize this threat from the U.S. government. And this is just the latest example of it. I expect much more of this kind of stuff in the future. Not good for the U.S. dollar.
Do you think China can do the same? We know they hold, trillions of dollars worth of U.S. treasuries, but the argument has been made that they can't really get rid of it. What do you think about that, Nick?
Yeah, I mean, they are kind of joined at the hip in a certain way, but I think they want to get rid of it. Clearly, they want to. The Chinese, don't want to be beholden to the Americans in any sense. But yes, they are kind of joined at the hip with those treasury holdings and with their economies. But I think, look, the Chinese are much longer term patient people culturally. So they're going to move. Yeah, they might not. They probably, it would be uncharacteristic of them to make a drastic break. What they're going to do is slowly, over years, wean themselves off of it. And I think you've seen that. I mean, you're seeing that in other areas. You're seeing that with, the trying to detach their economy and make diversification with their new Silk Road project, the One Belt, One Road. They're trying to do it by, they're the largest producer and buyer of gold in the world. They're buying tons of gold, and they're very opaque about that because, they don't want to tip their hand. So they're making moves. No question. They're making moves. But I don't expect them to do anything drastic. And if they do look, if the Chinese do something drastic, it will be for the kill shot. They're not going to announce a half-assed measure. They're either going to do it very slow over a period of time, or if they do something drastic, they'll make sure they have all their ducks in an order and that it'll be the kill shot for the US dollar. So we'll see what happens. I'm more leaning towards that they're going to do something slow and steady.
So Nick, what role does silver play to you in this picture, and how could it benefit from the debt crisis?
Well, frankly, I think gold is a better form of money in every way to silver. So silver, it's talking about resistance to inflation, hardness. Gold is the hardest of all commodities. Silver is number 2. So the supply growth of silver is much higher than gold. Gold is 1% to 2% per year. I don't know the exact number of figure for silver. It kind of depends on how you measure the stockpiles of silver, but it's significantly higher than gold, but still better than every other commodity. That being said, silver is a mix of and it's primarily an industrial commodity. And frankly, I'm not very interested in silver's industrial. I'm not, I don't really, I'm more of into the monetary trends, the big macro monetary picture. I'm not really concerned about, industrial use of silver or industrial commodities in general. So what is interesting about silver to me is its monetary use. So it still has some monetary use. There's no question. It's not a purely industrial metal like copper or zinc. It's mostly an industrial metal, but it still has some monetary use. My interest in silver is speculative. If I'm looking for a store of value, long-term store of value, I'll just go with gold or Bitcoin. Gold is superior in that regard. However, if I'm looking for if I want to get leveraged exposure to this trend, which is monetary debasement, silver would potentially offer some better gains. Why is that? Because the monetary component of silver, yes, it's small relative to the industrial use, but in times of monetary crisis, hyperinflation, all this kind of stuff, that's when that monetary use explodes in silver, and you see an explosion in the price. So what the bottom line is I'm betting on a trend. I'm betting on the monetary trend, where fiat money is going to be, inflated into oblivion. That's the trend I'm betting on. There's various ways you can play that. Obviously, gold, Bitcoin, silver has a role in that too, because it does have some monetary use. And when that monetary use is sought after, it can be explosive. So I'm looking at silver in more of a speculative way here.
So Nick, as we think about a true currency crisis when it happens, let's try to conceptualize for our listeners how it can happen. Would a surprise bank holiday be out of the cards? And maybe explain to us what capital controls are.
Well, no, that's something that's typical. You see that in many countries that have currency problems and banking problems. See, the government never announces these things beforehand. Because if they did, they would allow people to take action, and their surprise bank holiday, their devaluation wouldn't have as much of an effect. But it even happened in the U.S. too in 1933. People woke up one day and FDR signed that executive order, basically forcing Americans to turn in their gold at a fake price. So could something like that happen again? Oh, certainly. But I think we'll have to see, because that then wasn't a purely fiat. In the 30s, it wasn't a purely fiat money system. Now it's a purely fiat money system. So when you have the fiat money system, you always have politicians always have the option of printing money. So I think what they're going to do is they're going to print money until that doesn't work anymore, until they've exhausted that. So before we have any kind of bank holidays, I would expect to see much, much, much more money printing, because it doesn't make sense. Why would they do a bank holiday or capital controls if they can print money? Like if you're one of these politicians, what's the more attractive option? You've got a crisis. How are you going to solve it? Well, print money. So I think they're going to print money until it's obvious that they can't. And I don't think we're quite there yet, but I think we're getting close. We're not there yet, but it's getting close. So keep an eye out for that. And yeah, if they are going to do a surprise measure like that, they'll typically announce it on a long weekend or on a Sunday morning when people don't expect it. We've seen this happen in Argentina, Cyprus, Greece, all these countries that have emergency bank holidays. And what are they going to do? They're going to shut down the banks and not let you take your money out. Lebanon just had one too, and it's ongoing. So the U.S. is a little bit different because these countries really couldn't print their own money. They could, but they largely depended on the dollar or the euro. And Greece can't print euros. Cyprus can't print euros. Lebanon can't print dollars. Argentina can't print dollars. So that's why they resorted to those measures. If they could have printed the currency, they certainly would have. So that's why they did. But the U.S. is different. The U.S. can print money. So I think they're going to go for the easy option until that doesn't work.
So what are some of the considerations that our audience should take into mind to insulate themselves from this type of risk? How do you, for example, diversify your political risk?
Well, you got to look at different aspects of your life, and your finances are a large, a significant part of your life. So I would encourage people to invest in geographically diversified hard assets. Have some gold, outside of your country of residence in a non-bank. Don't put it in a bank vault because banks are all susceptible to banking regulations, bank holidays. Put it in a non-banking vault, and then you might be spared a bank holiday. Own some Bitcoin. Bitcoin is like gold. With Bitcoin is very, very important for a situation like this, because physical gold, you leave the country with bars of gold or gold coins, the security guys at the airport are going to find it in a second. There's no question. With Bitcoin, if you can memorize 12 words, you can essentially store billions of dollars in your head. And there's nothing anybody can do to extract that, unless you give it to them. But if you memorize 12 words, nobody's going to know you. You could potentially have billions of dollars stored in those 12 words. So Bitcoin is very, very, very important for situations like this because it's so portable. If there's a bank holiday, you can take your money with you. With gold, it's a little trickier. It's not really easy to take it out of the country, which is why I would suggest you have some already in safe haven countries: Singapore, Switzerland, Cayman Islands, these kinds of places.
So when we think about that as well, Nick, how do we, let's say, go about diversifying, as you were saying, your wealth? Should our consideration be to have maybe an international bank account, a different passport? What are the other considerations to have there?
Yes, those are very important. I mean, I don't like the concept of passports. I think they're more like slave cards, to be honest with you, that the government issues you and you have to have permission to do this or that. So I don't like passports, the concept of them, but if you're going to have to use them to be practical in this world today, you might as well have more than one of them so that, for whatever reason, if your home government decides to restrict your ability to travel, let's say you don't take the vaccine, let's say you owe debt, they claim you owe debt. These are reasons that they could, or they declare you a terrorist, which is an ambiguous, term they can slap on anybody. Let's say they do that. You have some politically incorrect opinions or some opinions that aren't popular with the establishment. Yeah, these things can happen. They can restrict your right to travel. I mean, look at totalitarian countries. They don't let people leave. They don't let the Soviet Union didn't really let people leave. Cuba didn't really let people leave. You had to apply for this exit visa. So yes, restricting the ability of people to travel, and we've seen this in this COVID hysteria that swept the world. This is something, some people, this is why, another reason why it's good to have another passport, because countries were restricting entrance into their countries based on passports and say, oh, you're from a COVID country, so you can't come in. Americans were treated, U.S. citizens were treated like this in a lot of places. You have a U.S. passport. Well, there's a lot of COVID cases in the U.S. You can't come to our country. Well, you have another passport. Well, welcome, tourist. So, this is the kind of stuff I'm talking about. Very, very important to have multiple passports for this reason. Bank accounts in other countries are good, but frankly, those benefits are diminishing because you gotta, number one, if you're a U.S. citizen, they're going to tell the U.S. government everything you do, so there's no privacy benefits. Number two, you have it in a fiat currency, so you still got the fiat currency risk. So there's some benefit to having some wealth in other countries in terms of banking. But frankly, Bitcoin is far superior. It's like having a Swiss bank account in your pocket.
So, Nick, when we're talking about these crisis currencies, why don't we make a bit more of a leap and talk about crisis investing, or investing at a maximum time of pessimism? What does that mean to you?
Yeah, I mean, it's the ultimate way to be a contrarian investor, and this is tricky because it's looking at extreme value. There's extreme valuations on both directions. I mean, right now in the broader markets around the world, everything is completely insanely, Looney Tunes overvalued. Totally insane. However, the pendulum can go the other way, and things can get insanely cheap. Those are the situations I look for when things get insanely cheap. So I look for the inverse of Tesla in other places, for example. And that's hard because all the money printing around the world has pumped everything up. It's the everything bubble. Even commodities commodities are the only place where you have relative value, I see right now. And even they are starting to go up. So, I mean, you've got basically everything. Nothing is cheap. But what this is all about looking, it's not just, looking at quantitative measures. It's also about measuring psychology. So you want to go to places where people are just disgusted to be and don't want to be, and all the sellers have sold. That's where you want to go.
So we're always looking towards identifying new trends and investment opportunities on the show. Where do you see opportunity at the moment, Nick?
Yeah, like I said, it's tough because the markets are so warped because of all the money printing. Outside of commodities and Bitcoin, I'm frankly not interested in the broader market right now. It's just not a good place to be. The value is insane, doesn't make sense. So, I'm looking at commodities and having a lot of cash, and by that I mean obviously some fiat, but gold and Bitcoin I would put in that category as well. So I'm trying to stay liquid is my point, because we're building up to all of this money printing it's going to get liquidated somehow, and it always does. Like the 1920s, which resulted in the 1929 crash. All the money printing in the 2000s, leading to the 2008 crash. This is building up to a very, very big crisis. So I'm trying to stay liquid for that crisis.
Do you have any thoughts as towards what might trigger that crisis, or what could be a sign that it is coming, Nick?
Well, yeah, it's tricky because nobody knows. These things can have a million different causes. It's similar to Jim Rickard's analogy of which snowflake causes the avalanche. That's exactly correct. I mean, the point, the bottom line is that the foundation is unstable, and we don't know which snowflake it's going to be. But I would look at interest rates. If the Fed can't control interest rates, then there's going to be, like, if they start going up rapidly, despite them printing money, despite them buying bonds and all this stuff. So if interest rates get out of their control, despite their best efforts to manipulate them, I would view that as an imminent sign.
Interesting. Perfect. Nick, do you have anything else to add before we wrap up here?
No, I think we covered a lot of important topics that are going on in the world today. And if people want to find out more about where they can get my thoughts and insights, they can go to nickgiambruno.com or follow me on Twitter at nickgiambruno.
And also, there's a lot of your writing available at kcresearch.com too,
yes.
Right? Perfect. Excellent. Thanks for your time today, Nick.
Yeah, thank you, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.